Stock investors rediscovering Japan these last 2 years are suddenly being reminded why they stayed away so long. Asia's number 2 economy has been on a tear with global investors thanks to an unlikely, safe haven, halo. Despite underwhelming national growth, flatlining wage growth and the globe's worst debt burden, Japan stacked up favorably to an inflation-wracked US, a COVID lockdown-plagued China and a lethargic Europe. The Bank of Japan, meantime, has generally remained in easing mode as the vast majority of global central banks tighten. Warren Buffett making his first ever big Japan bets in late 2020 sure didn't hurt. Those headlines alone had Japanese assets going viral in global financial circles. With the Nikkei Stock Average hitting 30-year highs this year, Prime Minister Fumio Kishida had one job: signal that the reforms on which investors are betting are in the works. Even better, put an actual upgrade or two on the scoreboard to validate investors' bullishness. Kishida hasn't delivered. In his first 2 years in office, he failed to implement any phase of his new capitalism strategy to increase incomes and catalyze a startup boom. Since taking the top job in October 2021, Kishida hasn't resurrected any of the repairs promised by his mentor, the late Shinzo Abe. From 2012 to 2020, Prime Minister Abe pledged to cut bureaucracy, modernize labor markets, rekindle innovation, incentivize youngsters to take risks, empower women and reclaim Tokyo's place as a top financial center. Mostly, Abe prodded the Bank of Japan to add extra firepower to the quantitative easing off which Japan has lived since 2001. Abe's government did have one notable win: encouraging companies to strengthen governance and improve returns on equity. Yet without other policy changes, all Abe did was prove that trickle-down economics still doesn't work. Most CEOs haven't shared profits with workers. Kishida sought to regain the reformist momentum for his Liberal Democratic Party. To no avail, which helps explain why his approval ratings are around 28%, the worst of his tenure. And why Japan's big stock rally shows signs of stalling out. Some investors are even wondering if China's bruised stock market might now be a better bet than Japan's. The rationale: Beijing's efforts to boost the economy via assertive fiscal and monetary stimulus will revive the globe's worst-performing major stock market. Mainland equity valuations, it's worth noting, are at historic lows. Japan, by contrast, faces intensifying headwinds from abroad as its biggest trading partners slow. It's importing inflation amid rising commodities prices faster than Tokyo expected. And now the BOJ is under pressure to close the gap with rising U.S. bond yields. Any tweak to QE policies that have become the respiratory system of a $4.3 trillion economy will choke off economic growth and upend the calculus on Nikkei and Topix index shares.